Good afternoon, everyone. My name is Karen Bowles, and welcome to today's webinar. Before we get started, I'd like to go over a few items so you know how to participate in today's event. When you join the webinar, you selected to join either by phone or computer audio. If for any reason you would like to change your selection, you can do so by accessing the audio pane in your control panel. This webinar is being recorded. All participants are placed on mute for quality assurance. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time, and we will collect these and address them during the Q&A sessions throughout the webinar. We will also be sharing the recording and the slides following the webinar. I would now like to turn it over to Kathy Glazer, VECF President.
Thanks, Karen, and good afternoon, everybody. Tiana, if we can go to the next slide, I'd love to review the agenda for our time together today. We are really happy to welcome back some resident experts who have helped us with these subjects before, Gary Romano with Civitas Strategies and Mike Austin with the Hampton Roads Small Business Development Center. They are each going to take some turns reviewing some information that we think will be helpful to you as you consider whether some of the current federal stimulus resources may be something that you want to pursue. And we also want to point out that in the chat box, there are links to the guides. There's one in English and one in Spanish, but this is a navigation guide for considering and for understanding what the different opportunities are, and for resolving for yourself which may be applicable to you. And Gary is going to review the guide first, and then we'll have some questions, get him any questions that you may have, and then we'll move to Mike Austin, who's going to be giving some information about Virginia-specific resources in terms of the good folks who are willing to assist at the small business development centers across Virginia, as well as sharing some information about potential lenders for these programs that may be of interest to you. So with that, I'm very pleased to have everybody here paying attention to a really important topic and something that's very timely and time sensitive. And so with that, Gary, I'll turn it to you.
See, I was so dutiful about muting myself, you know.
No, we can hear you. Thank you.
No, I was before. So I'm glad to be back. We can go to the next slide. And talking about, we can go one more, federal funding and stimulus. We can go past the disclaimer. And then what we're going to do is we're going to talk about three things today. So one is we're going to review where we are in the federal funding right now. And, as you're going to hear me say many times, it is like last spring, a shifting landscape. But, we do have, I would argue, more certainty than we did last year. And so we're going to talk a little bit about where we are. Then we're going to talk about 6 questions. So I spent my Christmas vacation going through all too many pages of the stimulus and distilling down 6 questions for providers, just like you, that you can ask to determine your initial eligibility for some of these programs. And then we're going to talk a bit about how to get help and some resources, and Mike's going to continue that conversation for some of your resources in the Commonwealth. So we can go to the next slide. So I want to go over 3 things before we start. So let's go to the next one. This can be overwhelming. And so if you do feel overwhelmed at any time, you're not alone, right? The resources we're going to give you are going to help, but this is going to seem like a lot. Next slide. But you can do it, right? You run a small business, this funding is for you. And part of my background in this work is since April, myself and my team have been working directly with family care providers, centers in the state of New Jersey to help them navigate the stimulus. We're doing it now with the latest round of stimulus. We're also doing it with homegrown childcare nationally. with family care providers. So, you know, there are real providers just like you who are getting through this, and you can get through this and you deserve it, to be clear. This is not for somebody else hypothetically, this is for you. Next slide. And, you know, as I mentioned, there is going to be help along the way. So we're not just trying to say like, you can do this, good luck, right? But we're going to give you some initial information today to give you a sense of what it looks like at a high level, and then some resources on how you dig down into it. So let's go to the next slide. So where are we? And this should say February, my apologies. The new stimulus was signed on December 27th, 2020. And you know, what's interesting about the stimulus, and you're going to hear me talk about this, because if you heard me talk last spring, there's going to be certain things where you're going to say, whoa, Gary, why didn't you mention that to us last spring when you spoke to us? And that's because the rules were different. So we're seeing not only some new funding, but we're also seeing some new programs and some new ways of working with programs that we're familiar with. So listen very carefully, because a lot of the things you may have felt that you knew in, you know, prior to December 27th, 2020, may be very different around the stimulus this time. So, and of course, we're still getting guidance. This is what we know now. And in some cases, you'll see the guidance is firmer than in other cases. We can go to the next slide. So as I mentioned, we've distilled this down into 6 questions, and don't worry, because I know probably a few of you are trying to take pictures with your cameras of the 6 questions. We're going to go through all of these, right? What I want to make sure you know is 2 things out of seeing this slide. One, it's a set data, it's a set number of questions, right? We're not going to go question after question after question after question. There's 6 of them that we're going to answer together. We can do this. And the other thing I want you to know is you can qualify for more than one of these. So I always get this question of, so I have to pick one of the 6. With some of these programs back in 2020, you would have had to, right? But part of the rules changes is that now you can pick more than one. Now we're going to talk about the fact that there are some things you have to know, some specifics, right? Like you don't want to take PPP money at the same time you're taking a tax credit on the same person. But if you qualify for both and you work the timing, you can receive money from both. Next slide. So let's go into question 1. And this is an easy one. This is your low-hanging fruit, hence the little apple, right? Did you have a PPP? And, you know, recently, I was very proud to say that, you know, a family care provider I'd worked with back in April just recently got her first PPP just last Friday. She got approved. And, you know, when she and I had talked back in the spring, she was one of the first people I spoke to. And one of the questions she said to me was, she said, Gary, I don't want debt. And I was like, I don't want you to have debt. There's a forgiveness process that's going to make the debt go away. And she said, do you know what that forgiveness process is? I don't know. We didn't have it at the time, but we have one now. And it's a very different environment now. And that person saw over time, learned about the forgiveness process that we had. It's gotten even better. I'm going to talk about that in a minute. So this is clear, much more clear than it's ever been. So if you've held back applying for a PPP, this is the place to start. Remember, we're in play right now with the PPP money. There's a limited amount of money. It's going down. We don't know how fast it is because we haven't gotten a update from the SBA in a week. But you know, we are spending down this money. So if you have an interest, now's the time to apply, right? To go over how the PPP works, it is a forgivable loan. So it takes 2.5 months of salary for you and your W-2 employees, not your 1099s, only W-2 employees. It gives you a loan, right? And a lot of people say, why am I getting debt? I thought you said this was going to be about money. So the government did this because remember, this goes for businesses like some of your home-based providers where it's just you, all the way up to companies with 500 employees. So they need to fit the rules to fit a lot of different businesses. So one of the things they did was they said, well, we're going to give you the PPP in a loan to make sure you use it in the right way, right? So you're not like that guy in Florida who bought the yacht, you know, or some of the other things that we've heard, some of the bad actors, right? But you're going to use it in the right way. Like almost everybody does with the PPP. You're going to use it on things like salaries, right? Up to at least 60% of it has to be used on payroll. But you can also use money on things like protective equipment now, that just got broadened, rent, mortgage interest, utilities, right? So there's a lot of things that you could be using this money on, and they start out as a loan to get you to do those things. And then sometime between 8 and 24 weeks, right, you can seek forgiveness if you spent the money, right? And forgiveness, as I mentioned, has gotten even easier. The new law that was signed on the 27th had a clause in it that if you have under 150,000, which is going to be an amazingly high number of all of you for your loan, it's literally 2 questions. Basically, you have to say you aren't one of those people who went down to Florida or who are in Florida who bought a yacht, right? But that you spent it efficiently and effectively in the way it was intended. And there's actually no attachments even. Now, of course, you do want to keep records on how you spent it, but this process has gotten easier. And once the bank takes a look at that form and there's not much to look at, then the SBA takes a look at it, the debt goes away. So then you get to keep the money. And so that's how that debt essentially becomes a grant. I'm very cautious because the word grant probably isn't fair in this case, but I think it gives you a sense of what's happening. What we're finding is similar rules to what we recommended in the past. If you can apply to more than one bank, you may want to start with a local bank. If you have a connection, you may want to use your national bank. We also have found a lot of the providers do well with some of the online lenders. Biz2Credit, Lendio, Cross River are all doing well for our providers right now. So those are some other options. So again, more than one bank. You can apply to more than one. You can only accept one loan, but I've never heard of anyone being offered more than one loan because once your numbers get put into the SBA database, it locks you. So nobody else can go after your loan from another, even if you applied to multiple banks. So definitely think about it. This is going to apply to all of you, corporations, LLCs, sole proprietors, contractors. If you're a 1099, you can apply for one of these. So
Gary,
again, yeah, go ahead.
let me interrupt you for a basic question to begin with.
Please.
What is PPP? What does that stand for? Could you explain
Paycheck
that?
Protection Program. So there you go. And that's, I've gotten so used to saying the letters that's what I go with, but it's the Paycheck Protection Program. So again, it goes to the heart of the intent of the program, which is to keep people employed, keep them getting a paycheck, including yourself as the business owner, through the pandemic. So let's go to the next slide. So now it's going to get a little bit more complicated, and I know that the first one, very easy question to answer, right? You either did it or you didn't. But now we need to get some numbers together to answer some of the next questions around stimulus. And what you're going to want is you're going to want your gross receipts for 2020 and 2019. And that's a fancy way of saying your business income, right? Now, if you have your 2019 tax returns, if you're a sole proprietor, right, for example, focus on Schedule C. You can look at your accounting reports. You can look at your bank statements. Do remember, these numbers need to line up with what you've already shown through your tax return to the federal government or what you plan to show. So don't game it here and then say, well, I'm going to game it a different way on my taxes, right? You want to do it with the same rules in the same way. So let's go to the next slide. So, we're first going to look at the change by year, right? And this only works if you were open all of 2020, and that could be for emergency care. And so, I know many of you shut down for a period very appropriately. If you didn't, this can be an option to start with for some of these numbers that we're going to need. But if you did shut down, right, you're going to want to look at quarterly numbers. And again, you're going to look at those gross receipts. If you're a sole proprietor, that 2019 should line up with Schedule C line 1. Corporations can be your total income, right? Make sure those numbers line up, because if you're ever audited, it's very low probability, but if you are, federal government's going to see the numbers were consistent. So let's go to the next slide.
As the slide is shifting, Gary, let me ask you a couple more questions. Some folks
Please.
are anxious to understand if they are eligible. One person said, if you did apply and receive the first PPP, are you disqualified and the remainder of this call won't apply to my organization?
If you already had a PPP, can you apply for another one?
Mhm.
Is that the question? Yeah, absolutely. We're getting there. So here's the thing, right? I swear we're gonna get there. A second PPP is dependent upon a revenue test. And that's going to be really important because you're going to need to show, and I promise we're going to go through all of this, right? You're going to need to show a decrease from those 2020, that means from 2019 to 2020. You're going to see the numbers go down in order to pass that revenue test. So that's why we're talking about these numbers. So if you're wondering about a second PPP, this is the starting point because you want to make sure that you can show these numbers before you ever apply. I don't know if there's any follow-on or should we proceed?
I think if you proceed, but I know
Okay.
people are anxious to kind of understand eligible or not for PPP.
We're going to get there because we need these numbers to show we're eligible. To be very clear, right? In many cases, because legally the banks don't have to ask you on a second PPP up front if you pass the revenue test. Many of them are asking prudently, but you're going to want to have these numbers in hand before you ever apply. Even if you think your numbers are going to turn out, record these numbers because if you're ever asked, right, and certainly at forgiveness, we have been told very clearly if you go for a second PPP at forgiveness, you will be asked for these numbers. So that's why we're spending a little bit of time on them. And certainly if you are an employer of W-2 employees, we're going to talk about some other opportunities, all dependent on these numbers. So they're really important to not only process, but then also hold on to. And this calculation, both these calculations are in detail in the guide that Kathy referenced. And we'll take you, it'll take you through it in detail, but it also has space. You could literally write it in if you want to. And in this case, you could see, we had a person who made 50,000 in 2019, they made 35,000 in 2020. Divide the two, they get a 0.7, right? That's 70%. So they're making 70% of what they did in 2019. We're going to talk about how you use these numbers in a few minutes. So we can go to the next slide. So getting your numbers by quarter. So some of the things we're going to need are by quarter as well. So if you can't get the annual number, or if the annual number may not hit the thresholds we're going to talk about, you're definitely going to want to have quarterly number. And again, these are gross receipts. Everything you took in, not your PPP, right? Set that aside. If you got one before, set that aside. That doesn't count for your gross receipts. But let's say you did get a grant from the Commonwealth of Virginia, that would count, right? Extra subsidy, that counts. And what you're going to divide these up you're going to use calendar quarters. So for some of you that use fiscal years, and you may say, is it my fiscal year? Is it somebody else's? This has to be by calendar quarter. So January, February, March, April, May, June, right? You can see it played out here. Again, this is in the guidebook as well, right? If you're closed an entire quarter, you should not enter it. So let's look at what those numbers are like on the next slide. So you can get an idea here, right? You have 2019, this provider was pretty consistent, right? In that first quarter, 2020, it was looking good. And this, by the way, this is actually based on real numbers that we've had from our providers in New Jersey, where we've seen a lot of them were starting to have a great year in 2020. And you can see they're actually at 158% of where they were in 2019. But then they closed, right? And then in quarter three, after they reopened, they're now at 83% of what they earned in 2019, 0.83. And then things got even more difficult. And now they're making less than half, right? So they're making 0.43% of what they made in 2019. So again, you want to keep these numbers. Even if you say to yourself, I know I'm making less than half, when we talk about some of these thresholds, write down the numbers, record the numbers, keep the numbers, just in case. So let's go to the next slide.
And while she's changing the slide, those columns were revenue, not loss.
That's correct. And this is going to be a really frustrating part for a lot of you because we're seeing this with our providers, right? I had a provider last week, and in New Jersey, they paid your subsidy at pre-COVID levels. She has 100% subsidy kids. It's a center. And they got some grants for PPE and other things. So she actually, revenue-wise, made more than she did in 2019. But the problem is her costs also pushed up so much. When you look at her profit and loss for the year, she lost $22,000, right? But if you just look at the revenue, you say, gosh, right? Kathy, you did well, you made more than you did last year. But in reality, she's actually at a loss. And this is going to be frustrating. I'm going to warn you. For some of you, you're going to say, this has been a horrendous year. I'm suffering as a business. And you're telling me I don't qualify for some of these things. And that's been some hard conversations that we've had to have with providers. Is that, unfortunately, this is the test we have, is revenue only. And I can understand, and we can go into a whole long conversation as to why revenue. I understand part of the rationale for it, but for this particular industry, it's problematic because your costs went up so much, and yet your revenue didn't decline in many cases. And this brings us to the first test, right? Which is if one of those quarters that we talked about had a decrease of 25% or more, or your whole year, right? So your revenue in 2020 was 25% or more down from 2019, then you can qualify, and you've already had a PPP, then you can qualify for a second PPP. So I know a lot of you were waiting for this, right? This is why I went through the numbers. And like I said, my understanding is almost every bank is asking for this up front, even though they don't legally have to, have this anyway. I know with the folks that we're working with, we will not recommend or give them guidance on a second PPP until we have these numbers in hand, because we want to make sure that if they're, gosh forbid, ever audited, or when it comes to forgiveness and they're asked about these numbers, they have them. Because the last thing you want to do is you go to forgiveness and you realize you didn't have the numbers right. And now you're kind of stuck, right? Again, the Paycheck Protection Program second draw is what it's called, right? Because you had a first draw, so the first one you got, now you're having a second draw. You're going to get 2.5 times payroll, right? One thing that's a little caveat here for some of you PPP veterans, when we go back to where we were in the spring, we had a very set time that we had to use to determine average payroll. Since then, the government has changed it so you could use that set time. You could use all of 2019 and average that, or all of 2020. And we're finding typically when our providers do an average of 2019, they actually end up with a higher number than they had previously. Sometimes it's in the order of hundreds, sometimes it's in the order of thousands. It really depends on the operation. So definitely take the time, take a few minutes, right? And many of you, if you have a payroll system, they'll do this for you automatically, right? Take the time to just double check your numbers and see if they've changed at all in a positive way. Again, if you pass this revenue test, if you're getting a loan of 150 or above, they will ask you for evidence. 150 and below, or below 150, they're going to ask for you at forgiveness. Many will ask for it up front, so do this, right? Again, you're going to apply online through a bank. You don't bring this physically down. It's the same process you went through with the first PPP, except you're going to caveat that you've been through this before. So,
and Gary, one of our attendees has asked, when you say revenue, you mean just income, not profit. Is that correct?
That's absolutely correct. Revenue is just what you've taken in. Again, everything you've taken in, no PPP from last year, right? If you've had a second draw, if you've had that first one, set that aside. But it's that revenue, is the amount that came in. Again, I know that's going to be frustrating to a lot of people who are going to say, but Gary, my expenses are up, my revenue isn't down. But unfortunately, this is the test, and I would not improvise on it, right? I've had a few people who've said, do you think they're going to check? Work under the assumption they will. Let's go to the next slide. Okay, so here's a part where, especially, if you're a center, if you're a family care provider who has W-2 employees, including yourself, W-2 employees is what we're looking for here, not 1099s, not sole proprietors, right? This is an important section to listen to. We're going to talk a bit about employee retention tax credit. This is a little confusing, but there's a great opportunity here. So, what we're finding is typically our centers, if the numbers hit right, they could get, their PPP, and then they could get even more in these employee tax credits, and you're allowed to have both now. So I'm going to talk a little bit about that. So if you have W-2 employees, really listen carefully. Even if it's just one, listen to what I'm talking about here. And the question you want to look at is quarter to quarter, right? Again, we're looking at those quarters. Did you have a 50% or greater reduction in your revenue from 2019 to 2020, or an ordered closure from the government? It can be a local entity, right? So it could be your city closed even though the state didn't. So, if you're answering yes to this, and again, you have those W-2 employees, you have the opportunity to apply for the Employee Retention Tax Credit 2020. 2021, it changed, right? So there's different rules for 2021, so bear with me. Let's just talk about 2020 right now. Now, some of you will say, gosh, Gary, why didn't you bring this up previously when we spoke in the spring? Originally, when the PPP came out and the Employee Retention Tax Credit came out and the whole pandemic was young and new and shiny, we were thinking it wasn't going to be a great deal of time, and we haven't had a great deal of time in it. The government said you can get one or the other. You can get a PPP or you can get the Employee Retention Tax Credit. You can't have both. So when you looked at it dollar for dollar at the beginning of the pandemic, you were much better off with a PPP. It was going to get you more money. But what changed in December was the government said, we're going to change some of the rules for the Employee Retention Tax Credit, starting with the rule that in 2020, you can have one with your PPP. Now, to be clear, you cannot use the money at the same time. So let's say Mike was on the payroll in May under the Paycheck Protection Program, right? And we were saying Mike's time was covered then in May. We can't also be saying, even if we can apply for one, we can't say he's also receiving money from the Employee Retention Tax Credit, because that's the federal government paying itself. Not allowed. But let's say June rolls around, we spent all our money on the PPP, Mike's still working with us, and so we still qualify for the Employee Retention Tax Credit. Well, now we can use it on Mike. So what you're going to hear right now is one set of rules for 2020. And again, these rules are going to change for 2021. So bear with me, because I feel like a little bit like I'm playing a game of 3-card monte. It's a little confusing, but there is money here. So this is what they call a refundable tax credit. And a refundable tax credit is a fancy way of saying it comes through your taxes, it's money that comes through your taxes that you can withdraw in the form of a check. Specifically, this comes through your Social Security taxes as an employer. So some of you who are nonprofits may be saying, well, Gary, I don't pay taxes, right? But you do on your employees. Everyone does. If you have a W-2 employee, you're paying taxes. Even if it's you who's the W-2 employee, you're paying payroll taxes on them. So this comes into your Social Security taxes. And what happens is that credit comes in. If you're a corporation, you can use any kind, whether it's a for-profit or a nonprofit, LLC, et cetera. You can use a Form 7200 to withdraw those credits when they accumulate in the form of a check. If you are a sole proprietor, right, you do have W-2 employees, this can come off your taxes. It can come off your quarterly taxes or your end of year taxes, right? So there's some opportunities here to get these credits. And the way they work is this. Let's say we have a quarter where it's activated, right? And of course, number one is you had to have continued paying your employees, right? So a lot of people will say, we were closed for 2 months and I laid everyone off. Can I do this? You can't. You had to have kept them on the payroll. And what you can do is the first $10,000 of income that's eligible, you can get half of it in credits, right? Up to $5,000 limit for the year. So, if let's say, Kathy makes $20,000 in a quarter and that quarter is eligible, then we can get half of the first 10,000 she made of that 20, $5,000. If Kathy works, let's say only $5,000 worth of time in that quarter, then we still get to keep half of that, which is $2,500. This is per employee, so you can see how this can add up if you have staff, right? This can very quickly add up. So there's some more details that I want you to read that are going to be in that guide that Kathy mentioned that you're going to get. But this is something that's worth taking the time. It's a little dense, but if you can get through it, especially if you have those W-2 employees, this could be a great opportunity, especially since it's opened up now for 2020 retroactively. So let's go to the next slide. So now the rules change in 2021. And so this is where it gets to be a little bit more confusing. So bear with me. What the government said was, as you heard, they made some rule changes to the employee retention tax credit in 2020. In 2021, what they said was, they said two things. Let's lower the threshold so more people can avail themselves of it. And let's increase the amount of money they can get back, right? So you're allowed to qualify for the first quarter of 2021 by looking at the last quarter of 2020, right? So the government is saying, if you're having problems in the last quarter of 2020, then we want to give you some money in 2021 to help boost you up. So the threshold is now 20%. So this is less than the PPP 2. So if you didn't qualify for PPP second draw, still take a look at that fourth quarter. See if you can apply for the employee retention tax credit. For many of you, you may say, gosh, I can apply for a second PPP and I can get the tax credit, right? If you do hit this threshold, right, in the first quarter, a couple of things happen. One is you can start to get up to $7,000 of that first 10,000. So again, if we take the example, if Kathy works $20,000 worth of time in the first quarter of 2021, we can now get 7,000, right? Plus, this is per quarter. Remember last time, or a slide back, we were talking in 2020 about you can only make 5,000 per employee on those tax credits. It's now per quarter, and it's for the first 2 quarters of 2021. So theoretically, if you stayed level and you didn't have a PPP, right, because you can't be billing both at the same time, you could theoretically end up with $14,000 per employee. So again, this is a refundable tax credit. It comes in, it's going to come into your Social Security account if you're a corporation, your employer account, if you're a sole proprietor, same way, right? But you won't be able to take it off immediately. Definitely take a look at these. And for many of you, if you do have employees and you're using ADP or Paychex or Gusto, this is a relatively simple process to get it going if you qualify. Like, in Gusto, it's literally a push of a button. ADP, it's one email to get this going, and they'll start accumulating those credits. And then again, you can withdraw them if you're a corporation using Form 7200. Form 7200, by the way, is going to come up again in a few minutes. It is a one-page form. I'm going to warn you, looks a little scary at first. It does. For full disclosure, one of my people used Families First Time early on in the pandemic, and so I used that form myself about 3 or 4 times. First time I looked at it, I was like, ugh. But take a deep breath, answer the questions. It's really not so bad. And once I got the hang of it, it took me longer to figure out how to fax it, because you can only fax it, and I don't own a fax machine. So it began taking me longer to fax it than it did to actually do the numbers. So take a deep breath with it. The guidebook has literally every single field explained in that form. So if you need to, you can look there and figure out what every field is. So let's go to the next slide. So, is your enterprise in a low-income community? I don't love this term. This is a term that we have from the federal government because it's a census term. So, I don't mean any offense by it. This is the way they're defining it, and I want to make sure you know that know the terminology that's being used. So if, right, you are in a census tract, and inside that guidebook, we have a place where you can look this up and simple instructions on how to do it, that has a poverty rate of 20% or greater, it is considered to be a low-income community, right? And you can show an 8-week decline of 30% or more. Now, we're still learning how we're going to do this, right? Then you can apply or be eligible for the targeted EIDL advance. So now let's take a pause for a second. Some of you may remember the EIDL, the Economic Injury Disaster Loan from 2020. It's still around, right? This is the one where it had an advance that was cash that you got to keep, but then it also had a loan component, which was debt, which didn't go away, right? Unless you, of course, paid it back. But there was a debt component to it. As many of you know, the advance ran out. The debt program was still there, still is today, right? This is a slightly different program based off of it. This is the targeted EIDL. And so I differentiate it because if you go to the EIDL page on SBA, you're going to say, but Gary, there's no advances. They're talking about how this is, there's no money there. Separate program, right? Go to the COVID section of the SBA page and you'll see this targeted EIDL. Right now, the guidance we have is that the SBA, and this just came out about a week ago, the SBA said what they're first going to do is email everybody who got a partial amount of that advance. So if, let's say Mike got $7,000 of the 10, but would have been eligible for the 10, they're going to send him an email with an explanation of how to prove that he's had this decline, that he is in the right community still, right? And because they're doing this based on information you gave them previously in your EIDL. And then he could get the balance of that, the other $3,000. Second, they're going to go to the people who didn't get anything but had applied for the advance. So let's say, again, Mike, to pick on him, applied for the advance. They said, sorry, Mike, we're out of money. But he is in one of these zip codes. He'll get an email. If he can show the decline in revenue, we don't know exactly how they're going to ask for that data because we haven't seen it yet. Then he has a chance of getting that full 10,000 on that advance. And again, that's free money. So what happens after that? So many of you will say, Gary, I didn't apply for the EIDL. I didn't get a partial loan. I'm in one of the communities that are part of this program. What happens to me? We don't know yet. And I wish I knew more, but I didn't. This is literally all we have from the federal government to date. So if you are in one of the census tracts that's irrelevant, if you applied and did not get your advance or you got a partial advance, look for an SBA, an @sba.gov email. That's what they've told us to look for. So look for that, and when it comes, follow the instructions to see if you can collect the money that you could get through this program. The next slide.
Gary, just kind of keeping an eye on time. I think this is your last question that you're going to review, and we have a good many questions in the question box. I guess I just want to say I really appreciate the guidebook and your patient review of all of this. Just for somebody who doesn't, do this every day, I just find this really confusing. Just the whole program. It's really not you, but the program is very confusing. It feels inordinately difficult, to try to get at it. I'm glad the resources are there, but it just feels very hard to get to. I would like to ask a couple of questions that, you may answer, as you go through question 6, but we've got a number of folks who are attending who either are about to open a center or who opened a center or started up in 2020. Are they eligible?
So depending on the program, right? So, as far as I know, and Mike, do you know the eligibility on the employee retention tax credit? As far as I know, if they don't have 2019 data, they can't apply for that.
You got to have a base year, both for the tax credit and for the loan programs. And 2019 is the base year that everybody is looking for. So without a base year of 2019, it's going to be a real challenge. And most of the loan programs, you have to have been in operation on February 15th, 2020. If you weren't in operation on that date, and unfortunately some on the call probably weren't, then you're not eligible for these loans because there's no base information to lend against.
Okay.
And to build off of what Mike is saying, two things, right? And I know that can be frustrating for a lot of you who have opened a facility, right? But what they're trying to prevent is let's say if I'm a really bad person, I start up a made up business very quickly to try to get some of this money. Most of the banks are asking you for some proof that you were operating as Mike described on February 15th. So that could be, in some cases, your 941, so your quarterly tax return. It could be bank statements. So be very careful about that, because I've had a couple of people who said, well, I started up around that time, but then I really didn't start taking money till the end of March. They're going to be looking at these things, right? So, as Mike is saying, unfortunately, there are some rules, and, we might wish they were different, but they're not. And so we need to pay attention to them and make sure we adhere to them.
Thank you. A couple more questions let me just knock out, and then we'll let you finish up your presentation, take a few more questions, and then hear from Mike. Let's see, if they received a PPP last year for April, May, and June, can you reapply?
April, May, and June, yeah. I mean, as long as you have spent the PPP, right, which you better have by now. I hate to say it that way, right? But a lot of you, you should be done. You've spent the first PPP and you still have need, and you meet that financial trigger that we talked about, right? You had that decline in revenue, you can apply for a second one, even if you don't have forgiveness. So I've had a lot of people misunderstand that and say, I haven't gotten forgiven, I can't get a second one. Yes, you can. You use the money, you still have a need, and you hit the financial trigger, document it, then you can apply for a second one.
Okay. What if you have personal bankruptcy? Can you still apply? Do you still qualify?
Personal bankruptcy, as far as I know, you can. The problem is if you've defaulted on an SBA loan or if your business is bankrupt. That's a problem.
Also, if you're actively in a personal bankruptcy, such as a Chapter 13, or you have a non-discharge Chapter 7, those could be issues. And keep in mind, too, that every lender can impose its own rules on top of what the SBA rules are. And some lenders are more strict in this regard than others. So it could depend on who you're dealing with on the lending side as to whether or not that is a deal killer or not for the PPP money.
Thank you, Mike. For these loans, do you have to pay taxes on the amount received?
No. Well, for the PPP, you do not need to pay money on the. There's kind of a triple thing, and this just changed again most recently, right? You don't pay taxes on the debt, right? Which you never really do. You don't pay money on the forgiveness, which often happens at the federal level. I'll get to that in a second. And you can still take the exemption. So there was a lot of questions because the Treasury Department had said, well, that's double counting, right? Because you get to take the salary off your taxes and you got the money tax free. It is double counting. It's also kind of crazy in a crazy tax year to do otherwise. So the government said we won't be able to do that now. I am sure the Commonwealth of Virginia will be more prudent, but we do have some states that are actually looking at taxing the forgiveness of your PPP at the state level, which is legal. So you may want to take a look and follow the news just in case that changes, but my guess is the Commonwealth will not be doing that. Mike, maybe you know better than I do.
Yeah, there's actually pending legislation in the Virginia House to actually tax PPP money on the state level. I think the measure is supposed to come to the floor on Thursday. Our local group has been working diligently since this came to light late yesterday to try to provide data to show that that would be a bad thing for the Commonwealth to do. However, it appears that probably it will pass. Other states are also taxing PPP money. So it looks like, and we don't know right now, it appears that in Virginia, if your PPP was under a certain dollar amount, it wouldn't be taxed. If it was above a certain amount, it might be taxed. They don't know if it'll be the whole PPP or if it'll just be the part that was forgiven that would historically have been taxed under the federal code. So a lot of this is up in the air, but there is there is an effort afoot to tax at least some of the PPP proceeds in Virginia.
Okay, so to be determined.
Yeah.
Gary, I'm going to ask you 3 more rapid fire questions and then let you finish up your presentation.
You got it.
If you received the PPP last year for a period of time, is that considered revenue when you look at your revenue and go to apply? So you leave that out.
No, you leave that out.
Okay.
Now, other stimulus that has come through the states, right, does count. At least it does as of right now. And there was some question as to whether the government may change that rule, but at least as of right now, so for example, let's say you got a PPE grant that originated from federal funds, but it came through the Commonwealth of Virginia, you still have to count that as revenue.
Okay. Are attendance records accepted for proof that you were open? Is that necessary?
No, I've never heard of that. What I have seen the banks specifically ask for is they want to see something that shows you were paying people or yourself, right? So it could be, if you're a home-based provider, it could be proof that of your bank account that you wrote some checks to yourself that were for payroll, or that you were providing payroll withdrawals, right, from your business account if you're a center, or again, a 941, that quarterly payroll report that you have to give to the federal government. So it could be any of those things, but I have not heard of attendance being used. They really want to see something that's showing that you had people that you were making payroll.
And if folks received in Virginia stabilization grants were awarded to opened centers, does that count toward revenue?
It does, and so does, and I don't know if you did it in Virginia, any additional differential you had, for example, on subsidy care does count, emergency care does count, and I know a lot of states paid that high to give an incentive for people to be open, but unfortunately that's all revenue.
Okay. If folks received unemployment benefits, can they still apply for PPP?
So it depends on who you ask and how you talk about this, right? There are 2 different minds about this. I will tell you my opinion, and Mike, certainly chime in especially if you disagree with me, because I know some people do, right? And I've had some conversations with folks at the national level about this. I feel personally that if you were taking unemployment, your business was not operating, right? If you were a sole proprietor, certainly if it's your employee, forget it, right? Like, that's very clear in the law. If you have an employee, if I employ Mike and Mike is on unemployment, I cannot use his time. But let's say I'm a sole proprietor, right? It's just me and that home-based provider. If I am unemployed, I would make the argument that you should not be also getting PPP income at the same time, because you are not operating. Now, could you get a PPP and then start operating, come off unemployment? Yes, theoretically, right? Are some states looking the other way around this? They absolutely are. I can name some of them if you want to air some dirty laundry at the state level. But I think it's very dangerous. Now, Mike, I'd be curious your opinion, and certainly don't hesitate to disagree if you do.
No, I think
what we don't want to do is introduce more confusion. Than, I mean, if we don't know, let's just pass. Is that fair enough?
Well, it's a gray area, and I would say if you've been on unemployment, I would not be taking PPP money. That's my interpretation of the law, and I've seen others interpret it that way as well.
Okay. Okay, we have a few more questions, but Gary, I think I'm going to let you finish your presentation, and we'll just ask if you don't mind. I know it's dense information, but we want to get to Mike's presentation as well.
Of course. So last question, did you need time off for COVID or remote school, right? And there's this Families First Act leave. You'll see again the details. I'll kind of skim through it real quick so we can make sure that we have time for other questions, and of course Mike's presentation. But basically this was time off the federal government gave for small businesses. 2 weeks if, you have COVID-related illness, caring for a family member, or quarantine, up to 12 weeks at reduced pay for having your home because of your child home because of a school closure. This is something that's available to you. Again, this is a refundable tax credit, like the employee retention tax credit works the same way. So if you're a sole proprietor, it's going to come off your quarterly taxes or end of year. Corporations, you could use that Form 7200 to request these funds. Document, document, document. You'll see in the guide, especially because of HIPAA laws, the federal government is not going to say, you tell me Mike was out with COVID, I want to see his doctor's note. But you should have some evidence that Mike was out with COVID, right? So, this becomes another way to do this. This was mandatory in 2020. The federal government has extended this out through the end of this quarter, so March 31st. It is now voluntary. So if Mike were to come up to me and say, I'm taking my COVID leave, it's up to me to decide as the employer. But if I do, I can get this refundable tax credit and it can pay me back. Now, of course, you can't then dock him his sick leave, right? Because it's above and beyond, or other time off. But this becomes another opportunity for you, especially as you hit these, cold and flu months where a lot of people are getting sick. So why don't we go to the next slide? Trying to catch us up a little bit on time. So, as we
looks like there's a little lag. Okay, great.
That's okay. So just remember, this is a moving target. Things are going to be changing, right? Mike will be talking about the small business centers, which are absolutely wonderful in the Commonwealth of Virginia. Keep an eye on their news. Keep an eye on the news that Kathy is sharing, right? As things change, you want to keep an eye out. So let's go to the next slide. And we can just pass these key dates for now, just to guess. Do you remember there is help? Go to the next slide. We do have the Stimulus Navigator, which Kathy will be sharing with you. Mike is going to be talking about the incredible resources that the Commonwealth offers. Do know that we also, through homegrown childcare, if you're a home-based provider, we provide free email TA nationally. Just email us at ppp@civstrat.com with your questions. It can be in English or Spanish, whatever you're comfortable with. You email us and you let us worry about who it goes to on our team. So those are some resources. And without further ado, why don't we transition to Mike?
Okay, thank you, Gary. Let's go to the next slide, please. We're going to talk about the COVID loan programs and what's happened so far with PPP round 2, and both nationally and in Virginia, and also talk about what resources the SBDC network can provide for you as a small business owner in Virginia. This slide shows you who we are. We're associated with the Small Business Administration. They provide some of the funding for our programs, and it's administered through George Mason University. There's a total of 27 centers around Virginia. I think the next page is a map that shows graphically some of our locations. And some are located with colleges or universities. We're located as far west as there is the state of Virginia or the Commonwealth. Some are located in other centers. Hampton Roads Small Business Development Center is headquartered in the Hampton Roads Chamber of Commerce building in downtown Norfolk. We have a branch on the Eastern Shore with the chamber over there. We're where people need us to be. And our funding, again, comes in part from the SBA. It also comes from local chambers of commerce, local universities. And as a result of that, a lot of the assistance we can provide, there's no charge for, or there may be a nominal charge. But in most cases, particularly with COVID assistance. There is no fee for the assistance that we provide. Our goal is to provide timely, unbiased information to our clients through either our website, and you can see our website address at the bottom there, our statewide address, or through webinars like this one. We want to provide information that will help small business owners negotiate what's going on in the economy. So let's go to the next slide. And we're going to briefly talk about, I've already mentioned what the Small Business Development Center network is all about in Virginia. I'm going to touch briefly on the Paycheck Protection Program, or some people call it Triple P. I'm going to also focus on the assistance we can provide, and then we're going to have time for questions at the end. So the next slide kind of gives you some feel for what's going on nationwide with this program. There was a total of $284 billion set aside under the Economic Aid Act, which is the law that went into effect at the end of December that set up the second round of PPP funding. So these statistics I'm providing to you are about a week and a half old. Some are national in scope, but others are Virginia based. It's important to keep in mind that the second round of PPP funding expires on March 31st. So you have a fairly short window of time to apply. You may recall too that when PPP first came out last spring, there was a rush to get the money. In the first 2 weeks, over $300 billion was put out through the program. And unfortunately, a lot of the people that got the first round of the money really didn't deserve it or need it. You read all the reports about sports teams and universities, hospitals, public companies all piggying up to the trough and sucking up all the money. So the PPP program was refunded in a second round that expired on August 8th of 2020. And at the time it expired, there was still about $130 billion available because a lot of people just gave up. They said it was just too hard to do, or it was too much red tape, or they didn't know about it soon enough. So there's been a real effort to get the word out that yes, the PPP program has been refunded. And again, you've got a short period of time to do so, to apply. So far through the 24th of January, $35 billion of that $284 billion has been approved, and that is comprised by over 400,000 loans. Nationwide, the average loan size was $87,000 to date, and fully 65% of the loans were under $50,000, which is really the goal of this second funding round, is to reach out to smaller borrowers rather than having large borrowers get all the money. So that's a good sign. Now, on the Virginia level, there were 6,800 loans approved through the 24th, totaling $672 million. And in Virginia, the average loan size actually was a little bit higher, was slightly north of $104,000. So the next slide, it gives us a breakdown. Again, you just scroll down to hit the whole slide. I don't know, I've got to adjust this. Yeah, put it all up there. Again, these are nationwide statistics. Unfortunately, we don't have any Virginia level statistics yet, but I think it's interesting that the majority of the loans so far have come from what we call small banks, that is banks with assets of under $10 billion, which to me still sounds like a lot, but that's what the definition of a small bank is. Large banks like Bank of America and other large banks have funded $105,000. And interestingly, credit unions came in fairly low, but this fintech, a fintech industry had generated over 18,000 loans. And you may not know what a fintech is, and I'll touch on that more in a minute. Top lenders nationwide are M&T Bank, Fifth Third, which is not in this market. M&T, I believe, is in maybe Richmond and definitely Northern Virginia. Bank of America is pretty much everywhere. And then there's Zions Bank, which is out in Utah. They're not in this market either, to my knowledge. The next slide covers, okay, top industries. I just want to quickly go over that. If you can go back to the other slide, sorry about that. The top industries that had received money were accommodation and food service, followed by construction. I just want to mention accommodation and food service because under the PPP second draw program, they are able to get a larger amount of money because instead of that 2.5 times, they get 3.5 times if they're in NAICS code 72. So the next slide goes into some of the more interesting, what I thought interesting folks that provided funding, that is lenders that did. Itria Ventures, had no clue what they were, had to look it up. That is Biz2 Credit. They produced a fair number of loans. Now, Biz2 Credit, if you've ever used them, they don't really provide the funding themselves. They're kind of a conduit to the lending community from applicants. So what would happen is you go to their website, Biz2 Credit, fill out a PPP application, and then they would route it to one of their lender banks that they're partners with. They've been very active in this program. They're one of the top 15 lenders for the PPP program at this time. Newtek Small Business Finance is a online bank, as is Cross River Bank. Cross River Bank I thought was noteworthy because their average loan size was only $24,000. So I think it shows that they're very active in the smaller loans, which I know a lot of lenders have kind of shied away from. So I think they may be a viable option for people, particularly folks that have not gotten a PPP first draw. They may be a good option. All of these banks, including your Sticks and Bricks local bank, use an online portal for the applications. So you're going to have access to a computer and have some basic computer skills really to navigate accessing the funding. You can't go into a branch and physically fill out an application. It's all done online. Fintech companies, again, they're lenders that are financial technology firms. They don't have any branches. You can't go down the street and find a branch for Biz2 Credit or Cross River Bank. Everything's done online. And keep in mind too that the SBA has highly encouraged borrowers that have already gotten the first draw loan to go to the lender that provided that first draw loan first to get a second draw loan, because that lender is going to be more familiar with you than if you started from scratch. Now, it doesn't mean that your first draw lender is even participating in the program. Some lenders have opted out of this second round of funding because they're still being bogged down by forgiveness applications for the first round. Now, what we're trying to do in the Virginia SBDC network is to provide you a list of banks and others that we know are doing them. We go out and poll them and say, are you providing PPP money at this time? If so, are there any restrictions? Are you only doing it for existing customers, et cetera? And we try to keep that list current. So if you go to our website, you'll be able to find that list of who's providing PPP money in Virginia at this time. And one thing, I did a webinar last week with the district director of the SBA in Virginia, and we talked a lot about should you apply to more than one lender. And I know that Gary mentioned that in his presentation, and the advice that we got from the SBA based upon first round experience is that if you find your first draw lender is not participating a second time, or if you're looking for a first draw loan, you may want to look for more than one option, but don't apply for more than one loan at a time. And if you decide to change lenders, like the first lender is just taking forever, make sure that they withdraw your application from their lending queue before you go to a second lender. Apparently what happened with the first round is that borrowers that went to multiple lenders at one time ended up getting these applications sent in to the SBA by all these different lenders. And unfortunately, it set off what the SBA calls a red flag for that company. And there were concerns that you might be trying to defraud the SBA by applying for more than one loan. And unfortunately, in the first round of funding, that's exactly what happened. So you want to make sure that if you do change lenders, that you let the first one know so they don't throw your application in there and then screw everything up, because you don't want to be considered a fraud suspect when it's a legitimate issue. So that's just advice from the SBA. Take it as it's intended. The next slide kind of goes into what we can do to help you. We know the process, and everybody on the call has addressed this. This can be a very daunting process. You all are focusing on trying to keep your businesses open, trying to deal with the daily excitement of running a business in your industry, in the childcare industry. And our goal is to help you better understand the process. You're going to find that there's some language in the documents that is totally foreign to you. Just like if I try to run a daycare center, I would be totally lost when they started talking about some of the jargon, if you will, that is used in your industry. The same is true about trying to borrow money. Some of the language is more user-friendly than others, and some of the lenders may have developed their own borrower portal that's more user-friendly than others. So if you run across some terminology you don't understand, we're here to try to help you decipher what that really means. But keep in mind too that we are not a replacement for the services that your accountants can provide. Some of the more technical questions, particularly ones related to the employee tax credit, things like that, you're probably going to need to get some sort of technical advice from your accountant to determine how you negotiate and navigate all that. We're not here to replace them. We're here to supplement those services. We also try to keep up with what the local lending landscape is like. We poll lenders on a regular basis saying, hey, how are you doing on PPP? Are you overwhelmed? Do you have capacity? We also compile documentation from our clients that say, this lender's been great, that lender's been horrible, that lender won't return my calls. We're here to help you negotiate this, again, because it's a short window of applying. Our goal is to also provide unbiased, concise information. We're not here to sell you on getting a loan. We're here to provide you with advice so you can make an informed decision as to whether or not pursuing either the first draw or second draw makes sense for you. We provide through our website and other resources like webinars like this one, no charge assistance to people to help figure out the application process. If we don't know all the answers, because every day I get asked questions that it's like stump the chump. I don't know what the answer is, but I'll look it up. I'll try to find out what the answer is, and we'll get that information out to the network. I spend several hours every day on the internet with centers around the state fielding questions like, what about this one? Because every time I think I've heard it all, something new has come up.
Mike, I think you've sold everybody on the value of these resources, and folks are asking how can they connect to their closest small business development center.
Okay, go to the next slide. At the bottom, we've got our web address that has where you can find the locations. It's just a suffix at the end. We're also in the phone book, but using the internet is probably the best way, because almost everybody I know of is working remotely now, and office phones are being answered by answering machines in a lot of cases. So find the closest location, talk to the folks there. We're here to help any way we can.
Excellent. And I know Karen dropped that link in the chat too, so folks can access that easily. Tremendous information from both of you about some things that are just not simple. So we really appreciate all of that. And folks are also expressing their appreciation, saying how difficult it is for them to have time and energy to apply for these types of loans just because of the overwhelming nature of the work that they do each and every day that we all count on. So super important. Now, if y'all are ready, I'm going to pitch some additional questions. I think you covered some of these, but many of these are ones that we haven't yet addressed and would love to see if we can get through those. Can you give a sense of the expected turnaround time from application for PPP to getting the approval and then the funding? You're on mute.
There we go. So it depends on the lender, right? And you know what I found is, and Mike, I don't know about your sense of this, there almost feels like there's a randomness to it sometimes. You know, we had one provider last week, a home-based provider, who literally got a loan in 45 minutes. Still don't know how exactly it happened, right? But 45 minutes from application, got a call, one piece of clarification, done, got his SBA number, etc. Once you get that SBA number and the loan is assigned to you, they have 10 days to put the money in your account, the bank does. But, you know, other people I know are waiting still. And what we do know is the SBA has said they are looking very carefully at this round, at the applications, to make sure that there isn't some of the bad actors that Mike described and I described out there. Mike, I know you said that you were following the Virginia market. You know, how have you been finding the turnaround times? Does that align with what you've seen there?
We're getting more feedback from folks that have attempted to get the second draw money, and they're running into some slowdown on getting second draw money more so than first draw. And I've talked to the SBA in Richmond about it, and the SBA has implemented some more safeguards, if you will, particularly for second draw applicants, to make sure that they really are legitimate and eligible for the money. So that has slowed down the process in some cases by a couple of days. Also, we're running into some cases in Virginia where lenders are telling their borrowers, particularly for second round borrowers, that they cannot apply for the second draw money until they have at least either applied for first round forgiveness or have received forgiveness on their first draw loan. That is not an SBA requirement, but with this program, like in the past, individual lenders could set their own guidelines. And a lot of them are saying, we don't want to throw good money after bad, I guess is their way of thinking. So we want to make sure that our customers are following the rules and have applied for forgiveness. So we got that one out of the way before we lend them more money. That is solely up to their discretion. And you just got to check with your lender to see how they're handling it, because as Gary said, it all depends. We hate saying that to people, but it does all depend on who you're dealing with as a lender and what their particular requirements are going to be.
Thank you. And is there a stipulation about what months that the PPP loan can cover in terms of payroll?
It's either 8 weeks. It's 8 weeks to 24 weeks now.
Okay.
And it starts the moment it hits your account, or the following payroll if you're paying weekly or biweekly, or every other week, excuse me.
All righty, thank you. Do I need to have a separate bank account for my daycare to file for PPP?
You don't. It does make it a little bit easier if you have one, right? Like, so with the providers that we're working with in New Jersey, a lot of the home-based don't. They only have their personal account. And so at times the lenders, as Mike said, they can ask for different things. Some of them are asking for some of your data in terms of that payroll, right, to prove you're operating and other things, and that does mean then sharing potentially your personal bank records. So if you do, I would be very careful about it and what you're sharing. Not that it affects the loan, it's just my opinion in terms of privacy and anytime you release your data. So just be careful with it. But there isn't a rule that if you don't have a business account, you cannot apply at all. Some of the banks do impose that rule, but it is not an SBA rule.
It's also recommended that if you do have a personal account for that purpose, that you set up an accounting system that would separate or segregate how you use your PPP money, even if it went into a personal account. So you've got some sort of separate record keeping that will show how every dollar went into the account from the PPP and how every dollar was spent out of that account. So it can get a little complicated, and that's the last thing people want to do is complicate their lives more. So it might make sense to set up a separate account, even though, as Gary says, it's not a requirement.
Okay, that's helpful to know. When thinking of corporations, so I assume that's multi-site, multi-state corporations, does the revenue, measure, the reduction, have to be corporation-wide or by state or by site?
So if you are a single corporation, right, with multiple locations, so let's say, like technically our business is in 3 states because we're virtual, it would be the total revenue, right, of all the operating locations. Now, if you're a franchise, it gets a little bit more complex, and I would look very closely. I'm sorry?
I said shocker.
I know, right? So I would say look at those details around. I'm never going to pretend to wing the requirements around a franchise, but if, let's say, you're up in Northern Virginia and you have like one center in Maryland, one in Virginia, one in DC, under the same corporate structure, it's the aggregate.
Okay. Let me see, lots of questions coming in. What if you have 0 employees in your home daycare, so a sole person, can you apply?
Yes, you can.
Yes.
You can apply, and if you're a contractor, you can apply as well, right? So, for example, if you own the daycare and you're the owner, you can apply. If you are a contractor of a daycare, you're 1099, you can apply yourself. The employer cannot apply for you because technically you're not an employee.
So I think you may have just answered the next question is please expand on how 1099 independent contractors are eligible.
You're eligible as a 1099, yeah. So just go forward with it.
Do you have a sense of the size or the amount of an average PPP loan for a home base for a family child care center?
What I could say is from our work on the first PPP, right, in New Jersey, so a little bit more expensive in terms of cost of living than most of the Commonwealth. It was $5,500. I would say roughly we're working the same, a very similar number now to that. And, again, that's average, so some are a little bit above. There's not that much variation off the 5,500 though. It's not wildly off of there.
Okay, thank you. A couple of questions about the employee retention tax credit. Can I apply for it if my employees were furloughed and I hired all of them back once I reopened?
You weren't paying them, you can't.
Okay.
You need to have had them on payroll, yeah.
What date should be used to prevent overlap of PPP and ERTC? The date the funds were used, the end date of your covered period, other?
Yeah, so if you're going to use a forgiveness period, right, as Mike said, they've now changed the rules again, right? For a while it was 8 or 24 weeks, now it's 8 to 24 weeks. So let's say for your PPP1, you're claiming, the 10 weeks from, June 1 to like August 15th, right? Well, then during those dates, you can't have the tax credit, right? Because they're covered by PPP. You can't get, by the way, Families First leave either, for that time if you're claiming it to PPP already. So you want to be very careful about that timing and making sure that you're not double dipping. Because if
Mhm.
you are, that's a potential challenge.
Okay. With EIDL loans, can you get forgiveness on those? Can you apply even if you got an EIDL loan in 2020?
No, unfortunately, that's real honest to gosh debt. Some of the banks are providing an opportunity to roll that debt into your PPP, which gets you a reduced rate on your debt, but the debt is still there.
Okay, thank you. Well, here's a cause for celebration. One of our attendees said that they received their their loan today.
Congratulations!
It can happen.
I know, see, case in point, real life person.
1 out of 500, yeah.
Oh gosh, we need some good news here. Does the employee retention tax credit apply to LLC businesses?
It does, as long as you have employees. If you're declaring as a sole proprietor and you're it, then no. But if, let's say I'm an LLC, I declare as a sole proprietor and Mike is my employee, I can claim it on Mike.
Okay. Could a PPP loan be used for a fence around their house to protect the children?
So a fence, yeah, I mean, I go with what the face Mike is making.
That's a good one, Gary. You take it.
Yeah, I mean, look, no, right? I mean, the basic answer is no, but unless it was damaged in the civil unrest that we had over the past few months, that is clearly in the law. So if you did have that fence damage because of that, if it's just because, you have kids like my two boys and they destroy things, no.
They could call it civil unrest.
I'm not going there, but what you can do is you can pay yourself and then use the money you paid yourself to do the fence, right? That is allowed. So I wouldn't, I would say pay yourself, right? And then what you do with your money is your business. But no, I wouldn't say, dear federal government, I spent all the PPP money on a fence.
Okay.
Well, you didn't end up with a 5-year loan at 1%.
Yeah. That's true. That's true. But we can get forgiven.
13, bankruptcy, can you apply? I think you mentioned that before.
So
if the bankruptcy has been, discharged, that is, you're through the plan, everybody's been paid according to the plan, then you should be eligible. And the word is should because it's ultimately going to depend on your lender as to whether or not they'll impose their own rules. But if you're actively in a bankruptcy, it's one of the questions in the application. And we've had a couple of cases where people were in active Chapter 13 bankruptcies and were deemed ineligible for the program for that reason. Even though there's no personal guarantees involved, it's a question that's in the application.
Okay, let's see. Does the employee tax credit apply for home-based providers?
So if you have a W-2 employee, and I know that is, not typical. If you did have a W-2 employee, for example, we did have one home-based provider we've worked with in New Jersey as W-2 employee. She is also, the owner is a W-2 employee. They're set up as an LLC. That's perfectly legal. Both of them can. But if you, let's say, only have 1099 contractors or it's just you, no.
Thank you. Can you apply for the PPP if you're not on your payroll for the center, but you take an owner's draw?
Yes, so you can apply for the PPP. You can apply for it using your W-2 employees payroll, right? And you would also use the money that you take in on your Schedule C line 31, so your net profit.
Okay. For religious exempt, are we able to separate the loss to the preschool from the church's gross receipts?
No. So, and I've actually talked with a few churches in New Jersey about this, right? So unfortunately, like one church I was talking to, the child care center did not do well, but the church did overall, and the child care center is totally owned by the church. So unfortunately, that generosity offsets that loss, the generosity to the church itself, which was doing some great things.
Okay, right, thank you. A few basic questions. Where do they get the PPP loan application link?
The loan application link. So to actually apply, the SBA has a form you could use to kind of practice on, gather your data, but you're going to have to go to each bank. So as Mike mentioned, choose the bank you're going to go to. There will typically be right on their homepage something about the PPP. Either they're participating or they're not participating, right? And that's where you get started.
All right. We have a good number more questions, but I think many of them you have covered. Since we're getting close to the 2:30 timeframe, I just want to mention that there are links in the chat to some of these resources and sites that have been discussed. Every registrant will receive a copy of the recording of this presentation, of the slide decks, and a list of links to resources that you can utilize. If you're a home-based provider, Gary has provided the email where you can send your questions, and that was ppp@civstrat.com. Mike has provided a link to or you can Google the website for the Virginia Small Business Development Centers. You can go to that link and identify the closest center to where you are, and most likely receive assistance at no charge. As Mike mentioned, in some cases, probably in terms of the extent of the assistance, there may be a nominal charge, but that is a tremendous resource that's available to you. The resource guides in both English and Spanish are available to you to help you work your way through the puzzle that is existing. But it also, I think, is when you have time to, kind of really process and look through those, I think hopefully will be a really supportive guide for you. I'm so appreciative to Gary and Mike for their patience and good cheer in working through this. I think they've devoted their lives to being a useful resource in this regard, and I think their good humor is no indication that they're taking the opportunity that you have and perhaps the challenge that you have before you and wending your way through this opportunity. They certainly take that seriously, and we appreciate very much their expertise and the help with answering so many of the questions. Just as a reminder, we will be having the Spanish language version of this webinar tomorrow evening at 6:30. I think we have a good number of registrants there, but please pass the word if you know of others who could benefit from that resource. And once again, congratulations to the participant who received their loan. That just kind of lightens all of our hearts, and just hang in there, keep the faith. Thank you for the services that you're providing, and we hope that you can all be successful with some of these resources that are available. Many thanks to everybody. Have a great afternoon.
Take care.
Thank you.